Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool community. My name is Wack. Today is December 12th, and today's episode is going to cover flat money reaching $10 million of TVL. Staking news, we're going to be talking about the case for 36 million gas on Ethereum mainnet. We're going to be talking about Donald Trump buying our crypto coins, and we're going to be talking about a whole lot more as well. So let's get started.
10, 9, ignition sequence start, 6.
So we're going to start today's episode here with this story from Flat Money. And this is actually from a couple of days ago, but I thought it's nice to give Flat Money some love because they're doing some really cool stuff. So they hit a milestone, and this milestone is $10 million in TVL. Now, Flat Money is a new kind of money. It's a flat coin. It's 100% capital efficient, they say, and it's backed by ETH. So what they're doing is they've got some yield stuff going on, and they've got like the level of risk that goes with it. So Flat Money is different because unit is actually 100%, 130% instantaneous APY, and Flat Money is reaching new all-time highs in TVL, and the yield is still so high. So they've got some like interesting stuff going on. I will be honest, I don't fully understand what it is they have going on and how it all works, but it seems like they kind of have faith in their yield and how it all works. So yeah, really huge congrats to Flat Money. What's really great, of course, is all their protocol is backed by ETH, and that's the only token they have backing it. So really great stuff. So congrats to them. Okay, let's move on to some staking news now. And we've been talking about this 36 million gas for a few days now. And here we have this post from Tony, who works at Ethereum Foundation, saying why I believe validators should raise the gas limit to 36 million, a thread. And it says, let's raise the limit. So the gas limit kind of explains what the gas limit is. That's like how much computational power goes into each block. And, you know, like things like ETH transfers use a tiny bit of gas, and things like, you know, opening leverage positions, for example, or certain kinds of DeFi activities can take a whole lot of gas, and all that fits basically into this limit of the 36 million. And then, you know, if the gas is getting high, then the fee impacts the fees, etc. on the network. So anyway, here there's this thread from Tony kind of talking about the last gas limit was increased in the London fork, which is August 2021, and it's been 30 million since then, and it's not gone up since then. So they're saying that now is the time to make that, help that go up, and that should be a good thing. But what they're saying that basically, you know, to increase the gas limit, you don't need a hard fork, you just need validators to increase it themselves. And in this case, like we saw yesterday, there are client teams that are already doing it, like Aragon and Nethermind, and I'm pretty sure that others probably will do it too, like Geth and Bisu. Anyway, here with reasons against, it says there are legitimate voices such as Micah that warn that raising the gas limit based on growing state on history, he's for sure not wrong there. It's a trade-off. So this is what Invis was saying as well about the growing state and history as well. And then calling those asking for more caution reckless or a threat to Ethereum is absurd. So, you know, we need to make sure that the main guiding light is that we want the home stakers to remain viable for as long as possible. And we're actually going to be talking about that next as well. But this is actually pretty cool. So Tony finishes his thread by saying, based on the above, I'm personally convinced that 36 million, which is a 20% increase, is a great first step. After Pectra, we may want to closely observe things like bandwidth and storage requirements before further increasing the gas limit towards 60 million and then potentially more in the future. So, like John, I don't know how to pronounce his last name, is saying that basically what we want to signal is that Ethereum layer 1 is still doing stuff, we're still growing, we have not ossified or stagnated, and good things will be coming from this, and it's just a matter of time before you know, we can start growing in a more measured way. And to do that, we need the state expiry from pre-merge, you know, May, but we also need to be aware of what home operators have in terms of bandwidth and in terms of hardware requirements as well. So keeping all that in mind, Next, we have this post that Yorick made in trading yesterday, and he says, "Hey yo, I need some hardware people. Ethereum Foundation people want to chat." So Patcher says that the person you should talk to is Yorick, and he said, "Yorick, are you on Telegram? They want a minimum spec perspective." And I was thinking of Joe, if you have the time. And then he said, "Oh, it's all sorted now." So I guess he found someone to do the work. But the reason why I'm covering this, like even though it's a couple of sentences, is that it seems like there is discussions happening in the background now of what we should be doing as an Ethereum ecosystem in terms of helping layer one grow, and also making sure that we are keeping home operators, home node operators, in the mix absolutely for as long as possible, and with as many of them as possible as well. And I think the fact that this is happening is actually really, really cool. And people want to kind of do the research and do the work into the best way to do this. And I think that's incredibly smart that they are taking a measured approach, because the last thing you want is for something in the network to break. That would be really bad. Okay, let's talk about some Ethereum news now. And one of the biggest stories of the day in Ethereum land is that Donald Trump's World Liberty DeFi project is using their treasury to buy ETH and to buy tokens. So here, Crypto Condom says, "Holy shit, Trump doesn't just use Aave, he's also buying Aave." And then there's links to transactions where they were using CowSwap to buy Aave. Look on chain here then has a bit of a better breakdown, saying that Trump's World Liberty is buying ETH, Link, and Aave. In the past 9 hours, the World Liberty multisig wallet spent $10 million USD to buy 2,631 ETH at $3,801, 1 million USDC to buy 41,335 Link at $24.20, and 1 million USDC to buy 3,357 Aave at $297 each. So this, of course, had everyone talking and, being talking about what's going on. So if we have a look at the ETH price, actually it had moved a little bit earlier in the day because of some of this news. Let's actually go to a slightly longer chart. Yeah, and you can see that, from the bottom a couple of days ago, it went all the way back up to almost 4,000. It stalled at 3,987. It had a slight retracement after that, but the Aave token was actually going gangbusters. If you have a look for the day today, it's up 25%, and that's with a small retracement as well. And the Link token was doing quite well, but not quite as well as Aave, and that was up as well, about 13%. And the one that's actually really interesting to see was CowSwap, because the Trump team wasn't buying CowSwap token. What they're actually doing was using CowSwap to buy all these other tokens. So CowSwap up today 26% as well. So there's some really cool narratives here that are kind of caught up with this, and it definitely makes holding your bags a little bit easier when you know that the president of the US is buying your bags. Now, don't get me wrong, Donald Trump does not know what Aave and Link probably are, or if he does, he's probably had someone talk to him about it for 1 minute. These are the people who are involved in running World Liberty Financial, and probably a couple of Trump's sons, especially Barron. It seems like he's more crypto aware than the others, but the reality is that they're coming on chain, they're transacting on chain, and they are buying tokens of DeFi protocols and infrastructure protocols and exchange tokens. So this is pretty cool. Pretty cool. Not making any judgment, of course, about whether it's permissionless, right? They can buy whatever they want or not buy whatever they want. But that's what's been going on. And then today, Donald Trump was at the stock market bringing in the bell for today. I don't know why that was. I think there was some reason. I forgot what it is though. But while he was there, he was talking to Jim Cramer about it, and he was saying that we're going to do some great things with crypto. So I think the crypto market kind of liked some of these things that Trump is saying. I wouldn't be surprised if we get a pump into the inauguration, and then it becomes like one of those seldom news events. But the reality is that there is a whole long way to go, and this is the first time in my whole time in crypto where we actually don't have the overhang of regulatory attack, and it's kind of unusual to be in this situation. Okay, and as we were talking about CowSwap, they're actually pushing really cool things as well. So one of the things they did today is launched CowSwap on Base. So now you can find CowSwap on Base. So CowSwap was available on Arbitrum before. It was available on Gnosis and of course on Ethereum mainnet. And now they're saying the world's most beloved DEX is coming to the world's fastest growing L2. Starting today, DeFi users can do more with Base when trading on CowSwap. Let's see where they're going to get, and then the moo sound. So this is actually really cool that you get more order types, you get more surplus, you get more protection from AVV, more seamless user experience, more possibilities for developers. And then the celebration the launch, they're giving away 10,000 cow tokens to wallets that trade on Base using CowSwap between now and the end of the year. And just quote tweet the first tweet in this thread with the transaction hash of your trade to be considered. Terms apply. So the quote tweets, it doesn't look like too many people have quote tweeted it. There've been 106 retweets so far, so that definitely tells you that if you want to win some cow tokens, you probably got a decent chance if you spam your transaction hashes. Okay, talking about some the Aave, I guess, as well, is that we actually have some interesting dynamics at play now, where the supply APY for ETH on Aave is at 4.3%. So if you deposit your ETH into Aave, you will be earning a nice amount of rewards on that. That's actually higher than staking rewards. Now, the problem is that the borrow amount on ETH is actually closer to 6.5%, I think. So there's a big spread. Now, the impact that this is having is if your staking rewards are less than your rewards that you're getting for depositing and borrowing Aave for your Ethereum, it's going to make looping unprofitable. And looping is when you deposit your LST, take out a loan against that in ETH, then swap that ETH for LST, and then do it over and over again, between 5 and 10 times, I guess, depending on how risky you want it to be. The more times you do it, the more likely is that you could get liquidated in a slight depeg. But these rates changing have such an impact. People who are using that. So here Jasper says all the folded STETH is losing money now, and then Lulu says the borrow APY is 6.41%, so they are massively losing money. And then he goes on to say that what they're saying is that basically for EtherFi as well, people who've got their tokens in those protocols and they're doing looping, they could be in a bad situation. And then a little while later, we actually saw that there was a bigger discount. There was a discount starting to form for Lido's STETH on the secondary market of nearly 0.2%. They actually had a bigger discount than our ETH there for a moment, but that was just short-lived, and it got put back to peg quite quickly. But maybe it's a sign of things to come, that if people are not making their trades profitable on with looping and stuff, they might wind down their positions, and in winding down their positions, what will happen is those tokens can go off peg, and of course enough people do it, they go even more off peg. And if people are really, really risky with their looping strategies, you could start seeing liquidations happening. So that's definitely interesting and something worth keeping an eye on. But Aave is just people are just using it so much right now. It's just making an insane amount of money, and yeah, they're doing some big stuff. So okay, moving on to some other news now. Here we have Eric Balchunas talking about BlackRock, and they're telling their customers to invest in crypto. So here Eric says, new report from BlackRock today that recommends a 1 to 2% exposure to Bitcoin ETF. The first time they've given a specific number. It says they put this out because they had so much incoming on questions of how much. So here, this is their report, sizing Bitcoin in portfolios. This is embargoed until Thursday at 8:30 a.m. So that's past that time. So this was earlier today. But here you see that they are telling their users, saying that those 7 stocks each account so far on average about the same share of overall portfolio risk as 1 to 2% allocation in Bitcoin. We think that's a reasonable range for Bitcoin exposure. Why not more? Going beyond that would sharply increase Bitcoin's share of the overall portfolio risk. So that is really interesting. I'm really curious to see when they're going to start actually saying, hey, go half Bitcoin and go half Ethereum. I think that's going to be really fun to see that happening. And then James here, Seyfarth, who also works with Bloomberg with Eric Balkunas, says that BlackRock is likely getting a ton of questions from clients asking how they should size the allocation to Bitcoin or IBIT. And they're essentially recommending a 1 to 2% Bitcoin exposure in a diversified portfolio. This is here the main charts to discuss the piece where they use a risk budgeting approach to Bitcoin allocation. So they've got some charts here about volatility and what's correlated and uncorrelated. Bitcoin's down busts, how they can go down really bad, but also the portfolios, like how it works with the allocation, and then if you are, up to 4%, what the issues could that be, and whether you're overweight Mag7 or Bitcoin, and there's a lot of work there. But I think basically we need the ETH ETFs to go for another few months. The Bitcoin ones, of course, have been going for 11 months now. Another few months, I think that's when these asset managers and people like that will start recommending it in their portfolios to everyone, their assets to their clients in all portfolios. And then finally, we got this story from Cointelegraph, and it's not something that I follow too closely, so I don't think I'll be able to explain it too well. But it looks like a hacker exploited a flaw in the Doge coin, the Doge blockchain node operation, and 69% of the nodes had this vulnerability and they crashed, and it could have taken down the entire network. So here you could see the nodes before was 647 and nodes after were 205. So the thing that I actually found really interesting about this is the fact that Doge is one of the biggest blockchains in the world. It's top 10 crypto, and it has billions of dollars worth of Dogecoin on there. And with all that said, there are only 647 nodes. Like Rocket Pool alone has 2,000 to 2,250 or so node operators, somewhere around that ballpark. The number, you might see like up to 4,000, but that includes node operators who already exited or node operators without any validators. But this is actually really interesting in that, there's no other blockchain like Ethereum in terms of just how widely spread the node operation for the protocol is. But on top of that, with one client having a vulnerability, like you could get hit really hard, like Doge did with this. However, with a multi-client architecture like Ethereum has, you can avoid that, because the combinations are such that only a small number of people are on any given client combination at a time. But here the explain like M5 TLDR says this flaw is called Doge Reaper. It allows remote crashing of nodes, could potentially have taken down the entire network. And the hack was executed using some old laptop in El Salvador. Coinbase knew about the vulnerability and marked it as low severity, and only avoided a $200 bug bounty to the researcher who discovered it. So there you go. But on that note, I'm going to end today's episode. So thank you all for listening, watching, and being part of the Rocket Fuel community. I hope you all have a great day ahead. Just before I end up, I'm going to send out well wishes to Pat. So if you're listening, Pat, sending out some well wishes to you. And otherwise, I'll see you all tomorrow. Bye.